Greetings again, amazing traders, and welcome back. Today we are going to be doing a market breakdown for pound dollar and euro dollar. At the time of recording, it is March the 9th, 2025, and this candle right here represents a weekly candle for euro dollar for last week's trading. Now, we saw expansive moves in the market last week, reaching out for key PT arrays here in premium. But the question is, why did the market move away from here? So we are going to go straight to the monthly time frame, and I'm going to show you something. Now, if you look right to the left of your screen here, we are going to spot what we call a bullish fair value gap, which is a level of inefficient price delivery. If you have been following along, you should already be familiar with fair value gap and other blocks, because I've been talking about that in the past videos already. So we are currently looking at the low of this candle right here and the high of this candle. It constitutes what? A bullish fair value gap, which is also a BC, because if you study here, only buy side was delivered here and no sell side, so the market had to reprice into this level to offer the opposing liquidity, which is sell side. And we have been saying that the midpoint of a fair value gap is a very sensitive area, also called a consequent encroachment, and you will agree with me that the market actually hit the consequent encroachment of this monthly fair value gap and then went a little bit lower to the lower quadrant in between the consequent encroachment and the lower quadrant, and then price never went lower again. If you study this candle here, you will agree with me that the body of this candle stayed strictly at the midpoint of this monthly fair value gap, which is called what? The consequent encroachment, and then we saw an expansive move from there. Now if you also study keenly, you will realize that the market traded above here and then stayed at the high of this fair value gap with this candle here, and then we saw expansive moves higher. There's a fair value gap here. I thought it was going to hold and equally this breaker block, but then we saw price move higher like nothing ever happened. And if you still continue to look on the monthly time frame, you will realize that we currently have a fair value gap over here, which is actually a CB, a sell side imbalance, and a buy side inefficiency, and that could be our next draw on liquidity, and equally this buy side residing above these old highs over here. So that is what we are currently looking at, anticipating that euro dollar is going to trade higher to sweep this liquidity resting above here. That is going to be our long-term draw on liquidity. But first it's going to be this fair value gap here, which is a CB, which is a CB, sell side imbalance, buy side inefficiency, and then the next is going to be these highs over here. So we are going to drop down to the weekly time frame, and we are going to see exactly what happens again on a weekly time frame. So if you study again keenly, you will still agree with me that even on a weekly time frame, we still have what? A BC over here. This fair value gap right here, the high of this candle and the low of this candle high right here is still constitute what? A bullish fair value gap, which is a BC. And if you study keenly, you will see that price stayed above the upper quadrant of that weekly fair value gap. I am going to do this. You see how price traded above the upper quadrant of this weekly fair value gap, which is a BC, and we never went below that. Respected the high and then took up from there. So that is how you can look at price. You always start from the highest time frame possible, and then you break it lower, so that you are going to see like the higher time frame draw on liquidity, because when you look at the higher time frame draw on liquidity, it becomes very powerful. Now if we look at what is currently happening on a weekly, right here we currently have what? A breaker block, this sell candle right here. This is a breaker block right here, and we are currently trading into that breaker block. That was the trading for last week. We are currently trading into that breaker block, and equally we also have this bearish order block right here, which is this candle, even though we have already traded above that bearish order block. So we could possibly be looking at what? A reprice into possibly what this volume imbalance right here, or even this fair value gap here, which could in turn act as what an inversion fair value gap, to see price continue its move higher into possibly this fair value gap that we looked at on a monthly time frame, and equally attacking these highs over here. Okay, that is going to be our draw on liquidity coming next week. Now let's jump to the daily and see what are the possible key PT arrays that we could be looking at. Now on a daily time frame, if you also look, I am simply going to delete this. Okay, if you also look on a daily time frame, you will agree with me that we are currently trading into what? A daily fair value gap. The low of that candle right there and the high of this other candle here constitute what? A bearish fair value gap, okay, which is actually a CB, a sell side imbalance, and a buy side inefficiency. Okay, and you will equally agree with me that what we have right here, a bearish order block, okay, which is a change in the state of delivery. Now if you also pay attention, you will notice how the market hit the lower quadrant of this bearish order block right here. I am going to calibrate that so that you can see exactly what I am saying. So the lower quadrant of that fair value gap is of that bearish order block is being hit, and we saw how price reprice from there lower, right? You see right here, which is at 1.08904. okay, we hit that beautifully, and then we saw how price reacted from there. Now also study what happened to this fair value gap right here. This fair value gap I am going to mark, and I'm also going to calibrate it so that you can understand. Now there are key sensitive areas on the fair value gap. Okay, we have the consequent encroachment, which is the midpoint of the fair value gap. We have the upper quadrant, and then we have the lower quadrant also. Now if you look at this carefully, you see how we trade below the consequent encroachment of that fair value gap. Okay, price went higher, hit the lower quadrant of the bearish order block, and then traded lower, trading below the consequent encroachment of that daily fair value gap. And if you equally calibrate this, you could still bear with me that we are trading at the lower quadrant of this bearish fair value gap, which is also a very, very sensitive area. Right now, study this level right here. You see this level, we are currently trading at the lower quadrant of what? The daily fair value gap, okay, which is at 1.08368. okay, so this is how you can always take out time to break the market, starting from the highest time frame. Now if we drop to the 4 hours time frame, I am going to take this away so that we can have a clean chart. Give me time. Okay, let's drop down to the 4 hour time frame and see what is possibly happening. Now on the 4 hour time frame, you will agree with me that after trading below the lower quadrant of that daily fair value gap, we have here a 4 hour fair value gap also, the low of this candle and the high of this candle, and we equally have here a bullish order block, okay, a 4 hour bullish order block. So this is a 4 hour fair value gap, and equally we have right here a 4 hour bullish order block. These two candles right here, okay, these consecutive down close candles, this one and this one, this constitute what? A bullish 4 hour order block, okay, these two candles right here. Now you see how we trade into the consequent encroachment of this 4 hour fair value gap. So there's a possibility that we could see the market just react right here and then continue to seek liquidity higher, since higher time frame is bullish. So we could still just stay above here and then continue to move higher, looking into next week's trading. But if we close below the consequent encroachment of this 4 hour fair value gap and trade lower, we could be looking at this candle to reverse its row. This bullish order block will reverse its row and act as a breaker block, and then we may see price move lower into possibly this other fair value gap right here, which is also a 4 hour fair value gap, this one, okay, and then maybe the one right down here. But I really don't think we will come right down here because market structure is extremely very bullish. We could just see the market stay over here and then continue to seek external liquidity, which is buy side liquidity. I hope you get what I'm explaining here, and maybe we may have to drop again to the 1 hour time frame to see what are the possibilities. Now on a 1 hour time frame also, we really don't have a lot happening here, but if we measure the high of this displacement right here and the low of this recent displacement, and we extend that across, we could be trading into the 50% range. Okay, so if you have been following along, I've been saying that when you take a dealing range like this, a dealing range is simply a range that has taken liquidity on both sides. Okay, when you take a dealing range like this, above the 50% level is always called what? The premium, and below the 50% level is called the discount. Okay, the 50% level is called what? The equilibrium price level. Okay, and if you study on a 1 hour time frame, you see that we are currently trading where? At the equilibrium price level, so we are still pretty much into premium. Sometimes if you are extremely bullish, the equilibrium price level can also act as what? A discount PDRA, which means you could also look for buy opportunities at the what? At the equilibrium price level to seek external range liquidity. I hope you get that. Now let's go back to the 4 hour time frame, and I'm going to show you something very interesting. Now on a 4 hour time frame, equally on EURUSD, if you are wondering why we had that expansive move last week, you will also agree with me that price traded were into a 4 hour bullish order block right here. Okay, the upper quadrant of that 4 hour bullish order block, and then we saw a market structure shift right here on a lower time frame when this high was taken, and this candle right here becomes what? A 4 hour breaker block. You see a market structure shift, price trade back into this breaker block and this fair value gap right here after sweeping all of this liquidity below here, this sell side liquidity. Now what happened? You saw an expansive move right to the upside into what? Into the key PD array that I have outlined, the daily fair value gap right here and the daily bullish order block that is resting above here. I hope you are able to follow along with what I've been explaining. Now we are going to go straight to pound dollar, and we are going to do a market breakdown as well. So let's switch to pound dollar and see what happens. Now we will equally start on a monthly time frame for pound dollar, and we are going to look at key PD array. On a monthly time frame, we don't have a lot happening on pound dollar except for this rejection block right here that we currently are trading into its lower quadrant on a monthly time frame. Then we will have to also look at the bullish order block right here to the left of our screen, and which is equally the reason why we saw price move aggressively higher. Now you will equally agree with me that price traded into the midpoint of a bullish order block, of this bullish order block, this monthly bullish order block, and we say that the midpoint of a bullish order block is called what? A mean threshold. You saw our price dropped into the mean threshold of this bullish order block, which is the monthly bullish order block, and then went a bit lower into its lower quadrant, then went above, stayed at its upper quadrant, and then moved aggressively higher into this rejection block right here. Now we have also equally a monthly fair value gap here that was not respected because price was extremely very bullish. So we have currently violated this monthly fair value gap right here and traded higher into the lower quadrant of what? This rejection block right here. Okay, so when price is moving, there's always a reason why it is moving. Okay, it is not random, and we are equally having a bearish monthly order block right here and the liquidity that is resting above here, which is currently our likely draw on liquidity. Okay, so we could see price expand higher to seek this buy side liquidity resting above here. So we are going to drop to the weekly time frame for pound dollar, and we will see if we have any institutional reference point. Same thing on a weekly time frame, we saw price trade into the midpoint of that monthly order block that we outlined right here after sweeping all the liquidity below here, and then we saw an expansion higher. Okay, seeking all of this buy side liquidity right over here, cleaning all of them and trading into this weekly bearish order block right here, which I am going to expand right now, and equally trading into the volume imbalance that we have here. If you can see very well, I am going to change its color so that it can become visible. Now you see that that weekly volume imbalance we are currently trading into, and remember that this guy right here is what the lower quadrant of that monthly rejection block that we marked. Okay, I hope you see that clearly. So we are currently trading equally into this weekly bearish order block, and then we saw how price traded back into the high of this volume imbalance right here. Okay, now we are going to also look at other factors to see exactly what could possibly be happening here. If you look to the left of your screen also, you are going to agree with me that here this 5 consecutive down close candle constitute what a bearish breaker block. Okay, a bearish breaker block, and if we extend that across, you will agree with me that we are currently trading into the upper quadrant of what this weekly breaker block. Okay, these 5 consecutive down close candles. I hope you see that equally. Now we are going to also look at this fair value gap right here that is also acting as an inversion fair value gap. So we have a lot of confluences right here. Okay, we are going to draw that across, and you will agree with me that the market actually hits the high of this inversion fair value gap right here, and then traded above, which is totally okay, into this weekly bearish order block. But then we saw how we repriced, the market repriced lower, closing below the high of this inversion weekly fair value gap. I hope you get that. So we are going to drop to the daily time frame, and we are going to see if you can spot other PT arrays on a daily time frame. Now on a daily time frame, what do we have here? We equally have a daily bearish propulsion block. Okay, because it is an order block that traded into another order block, so it becomes a propulsion block. Okay, so we have it right here, which is also a confluence, and we have traded into that, and we are seeing a reaction from there. We have traded into its midpoint, which is called what, a mean threshold, like I have been saying already. You can agree with me here, right? This daily or bearish propulsion block. Okay, you see how we hit that, and then we reprice lower. Okay, so let us drop down again to the 4 hour, and then we are going to see a lot. Now on the 4 hour time frame, you will agree with me that when the week opened last week, we traded into a 4 hour bullish order block right here. Okay, this is a 4 hour bullish order block. After sweeping all the liquidity below here, we traded into this 4 hour bullish order block, and then we took off aggressively. I think I did a video on that. If you watch my old video, the recent video that I did, this one right here becomes what, a breaker block. Okay, a 4 hour breaker block. We shifted structure and then came back into that 4 hour breaker block, hitting that beautifully and then taking off from there. There was equally a 4 hour fair value gap right here. We saw the market traded back into that 4 hour bullish fair value gap, and then took off aggressively into this higher time frame institutional reference point that we are currently looking at. Now you will agree with me that on a 4 hour time frame, we have something happening here looking into next week. Okay, if we take the this displacement high and this recent displacement low, and we run our FIPS, we could be trading into what, optimal trade entry. Okay, optimal trade entry. Let me do that correctly so that you can see exactly what I am doing here. So I am going to do 70.5. I am going to check this out, and let's see why the market is trading right down here. I'm going to reverse that. Let me reverse this. Good. If you study this correctly, you will see where we are currently trading at. This is actually optimal trade entry level. Okay, which is 70.5% FIP level. Let's do that correctly on a 4 hour time frame, and you are going to see why we are trading where we are currently trading. Now look at this. We also have what, these two close candles here. Down close candle also is a 4 hour bullish order block, and we also have right here a 4 hour fair value gap, which constitutes or corresponds with what, the 70.5 Fibonacci level. and this is where we could be looking at buy opportunities. So it is possible that the market could just stay right here and then move higher and continue to seek the liquidity or buy side liquidity that is resting above there, and then possibly trading into the overall buy side liquidity that we outlined right over here, which is our higher time frame draw on liquidity right over here. Okay, all of this liquidity right here, this fair value gap, and possibly the buy side liquidity that is resting right above here. So looking into next week, it is very possible that we could see a continuation higher. Yeah, but if we fail to do that and we break below here, we could be using this 4-hour bullish order block or this one as what as a breaker, and then we could start to seek lower prices, possibly into this fair value gap right here, or this one right here, or this one right here. So it's going to be more or less a high resistance liquidity run, but we are currently looking at buy opportunities since overall market structure is bullish. So we could only see a reprice into this closest institutional reference point, and then we want to see price continue higher looking into next week. Now, to prove to you that institutional order flow is bullish, we want to see all of these sell candles or down close candles support higher prices. So we are still looking at the possibility that this down close candle could still support higher prices into the overall draw on liquidity above this marketplace. I hope that you have been able to learn something. Maybe I did put a lot out there, but hopefully you will see value in this as we look at the market coming next week. All right, so we have liquidity resting below here. If the market has to go lower, we could take care of this liquidity and we could trade into this hourly fair value gap. I am looking at the 1 hour currently, this hourly fair value gap, and I think this should be the lowest draw on liquidity so far if you want to go higher, because we have this fair value gap here, 1 hour fair value gap, and we have this down close candles here which constitute a 1 hour bullish order block. So if you want to go lower, maybe to grab liquidity lower, we could possibly trade into this, and then we see higher prices coming into next week. I hope you have been able to learn something, and we are going to see how the market will play next week, and we'll keep in touch. Okay, thank you so very much for watching, and goodbye.